Namaskar. Good morning to all of you. Today we will look at a company which was functioning for a long time but got listed very recently. The name of the company is Fine Organic Industries Limited. It got listed only in June, July, etc. of this year. Its Q1 results are reasonably impressive. Therefore, we are taking it up. It doesn't have a big past in the after listing period. In the pre-listing period, it may have functioned well, but now it is growing. It is the largest manufacturer of oleochemical based additives in India. Oleochemical based additives. It produces a wide range of specialty plant based oleochemical based additives, and these are used in foods, plastics, cosmetics, paints, inks, coatings, and other specialized applications in various industries. The company has got very strong distribution network and good clients within India and globally. It has got state-of-the-art manufacturing facilities at Ambernath, Badlapur and Dombivli, all in Maharashtra. Actually, they are said to be very near to Nausevna port, so exports are easy. The share got listed in July. The share price of Fine Organic Limited on the first day, it got 5.08% over and above the issue price of 780. Issue price was 783. It closed at 823 on the first day. The 600 crore public offer was oversubscribed by 8.99 times in June of this year. The IPO was actually an offer for sale of 76 lakhs 64,994 equity shares by members of the promoter group. Now, after the listing is over, the company has released its first post-listing Q1 results, Q1 FY19 results. Revenues have grown 39% year-on-year to 240 crores. 39% year-on-year to 240 crores. EBITDA has grown 145% to 53 crores. EBITDA margin has grown to 22.2% from 13.2%. Profit after tax has grown 181% to 37 crores. Profit after tax margin has grown to 15.4% from 7.6%. Equity now stands at 15.33 crores for the last 2 quarters compared to 5.11 crores before that. Obviously, this is the result of the issue, public issue. Current market price is around 976, and based on it, the price earning ratio works out to 20. 20 is moderate. Neither too high nor too low. Face value of the share is 5 rupees and volume of transactions is 1,72,000, indicating that buying and selling are fairly easy. Now, after the result, Mr. Mukesh Shah, the MD, said, a successful listing on the stock exchanges has been a very proud moment for the company. The company had a successful FY 2018 with growth across all product lines, both in volume terms and rupee terms. Volumes have grown, value has also grown. However, this is one point we need to note. We are operating at the peak of our capacity utilizations in Q1 FY19, and therefore we have undertaken capacity expansion program already. So, already operating at peak capacity, unless there is additional capacity coming in, it is difficult to go beyond this in volume terms. So, we expect this additional capacity to operationalize at different points of time over a period of the next 2 years. Huge expansion programs are going on, and each of them will get operationalized at different points of time. We will examine that. Now, one company, Fine Zealand India, has completed setting up of a facility at Patalganga. At Patalganga, one facility has been completed. The trials runs are conducted, and currently standardization procedures are being carried out. So, this is likely to come up for production at the earliest, the Patalganga facility. The said facility will manufacture food premixes for the bakery and confectionery products. Food premixes for bakery and confectionery products. Now, for the company, R&D has been excellent, and the products require specialized skills, processes, and equipment to manufacture additives from base oleochemicals. Base is oleochemicals. From that, through R&D, many additives are being manufactured. It's a complex process, and the complexity of the process gives significant advantage to this company against any new entrants. The company has long-standing relationship with customers. Manufacturing capabilities are very high, along with in-house project execution capability. The company can execute all its products in-house, need not engage outside contractor. Therefore, with the in-house R&D and etc., it maintains a leadership role and is a key supplier of additives across the globe, not within India alone. Now, the company has released a customer presentation recently, and the additional details in the customer presentation I am going to give here. A joint venture has been signed with Adco-Tech Germany for food additives in this year. Now, going forward, when the additional manufacturing facilities get completed, the company will more than double its capacity to 131 kilotons per annum. And it will expand into new products for food premixes and food nutrition additives. Food premixes and we have already seen Freezeel India has completed for food premixes at Patalganga. Now it's likely to come on production. One of the leading manufacturers that developed proprietary technologies to manufacture green additives. So it has developed proprietary technologies, own technologies to manufacture green additives without chemical additions. Now it has got a diversified product portfolio for high growth industries right now. Slip agents, which are friction reducing additives. Anti-stats, they mitigate buildup of electrical charges. Lubricants, flow improvers and mold release agents. Processing aids, anti-fogging agents, emulsifiers, preservatives, foods and beverages used in biscuits, voluminous sponge, chewing gums, etc. Then cosmetics and pharmaceuticals like creams, gels, lotions, varnishes, rubber additives for elastomers to reduce dampening and abrasion, painting and coating anti-settling agents, emulsifiers, anti-sagging agents, etc. Feed nutrition to replace harmful antibiotics and improve feed nutrition. Overall, it has got a portfolio of 387 products. It is well positioned to take the benefit from in the industry because of peculiar industry dynamics. There are very limited players with these capabilities. It's a highly regulated market and very high entry barriers. The technology is very high, very difficult to enter. Significant customer stickiness. Customer, once he enters into agreement with somebody, he will stick with them. So he will not change. So that has been the practice. Now, where are the facilities located? First Ambernath facility, 49,500 tons per annum. Badlapur facility, 6,400 tons per annum. Dombivli facility, 8,400 tons per annum. The total capacity currently operational is 64,300 tons per annum. Now, expansion plans. Second Ambernath facility, 5,000 tons per annum for contract manufacturing. Third Ambernath facility, 32,000 likely to get completed in Q1 FY20 next year. Patal Ganga facility 10,000 tons per annum. Trial runs have already started. German facility 10,000 in likely to be completed in Q1 of FY21. So at different points of time, including next quarter. Indian plants are located close to Nauseva port, which is ideal for exports. So for its 387 products, there are 631 direct customers and 127 distributors are also available. Now, exports are 55%, imports are 45%, including in Q1. So the focus of the company is on great R&D and developing new products. Company has got in-house capabilities for plant designing and engineering. If it wants to expand capabilities, the engineering can be done in-house. Plant designing and engineering both. So that leads to lower capital expenditure and quicker commissioning. Now, will it be a great performer in the coming year? It will be a good performer in the coming year. But how big a performer it will be, that we will have to wait and see. Now, in the last 1 year, the profit has definitely gone beyond 100%. So, will it repeat such performance this year? We don't know. Now it is functioning at the top of its capabilities, and different capacity expansions are coming. So let us wait and see. And customers will always be with it. How much Patal Ganga will contribute, that depends. That makes it whether it is a multi-bagger, etc. So, but anyway, its future seems to be very good. People who can stick with it for 2 years until all these commissionings, etc. take place, I think they will reap good rewards. I have come up with this is a new company. And we will see some good promising new companies also. Currently price is already nearing 1,000. So is there a possibility of the price expanding far beyond? I don't know. Price earning ratio is 20, which is very moderate. It gives some scope for improvement. Suppose Q2 Patal Ganga products add and the performance is very good, maybe the price can go up significantly. So you can take a chance on that. Long-term investors have nothing to lose in this company. It will always be growing. That's what I feel. Thanks for listening. I'll come up with another good company in future.